Thank you, Nicholas. Good afternoon, everyone. My name's Simon Jones. I'm the Marketing and Strategy Director for Premier Inn. In this section of the presentation today, I'm going to cover three things. Firstly, I'm going to talk about the underlying dynamics of our market, which we believe support the long-term growth of our brands and our milestone of 75,000 rooms by 2018. Secondly, I'm going to talk about our bottom-up network planning process, where I'll talk through the science that we use to identify opportunities for network growth, whilst ensuring we sustain our returns. And lastly, I'd like to bring a little bit of colour to the shape of the rooms opportunity within the UK, and that's both in terms of the geography, but also the type of catchments where we see future growth potential. Firstly, just looking back a little bit, our market has seen little volume growth since the onset of recession in 2008, and against this backdrop, supply has actually marginally declined at a macro level. However, over the same time frame, brands have significantly gained share, growing from 40% of total supply to around 46% of total supply by 2012. Premier Inn has also gained share of supply over this period. From 2008, we have increased our share of supply from around 5.8% to 7.6%, which we believe is testament to the brand and our network strength. The independent sector is in structural decline, and we believe this is a consequence of four factors. Chief amongst these being the superior product offer and consistency of brands and the economies of scale offered by branded networks, in particular from online distribution. Notwithstanding this decline, the independent sector in the UK remains very large, and we believe this provides further opportunity for branded penetration within the UK market, especially within the branded budget segment, which is at a comparable price point to the majority of independent hotels and bed and breakfasts in our marketplace. Clearly, underneath this overall market performance, there are variations at a regional level. In particular, the London market has significantly outperformed. From 2009 to 2012, the Greater London market grew by 6.9% per annum in RevPAR terms, driven almost exclusively through rate. And as a total market, Greater London still delivers annual occupancy in excess of 80% at these high rates. In the regions, growth has been less strong over this time period. However, RevPAR has still grown by 1.5% per annum, and in contrast to Greater London, this growth has been driven by an increase in occupancy of around 4 percentage points. Moving forwards and referencing back from the chart 2 slides ago, we envisage that brands will continue to gain share from independents. By 2018, we expect branded share to increase to around 54% of total supply, with budget branded share to have grown to around 28% of total supply. In terms of the rate of decline of independents, we expect this to continue, although the absolute rate of decline will slow over the next 5 years as the pressure on this segment is slightly reduced by a modest recovery in the UK hotel market. So, given this macro top-down view of the market, how do we practically translate this into specific hotel opportunities for Premier Inn? Well, on this chart, as you can see on this chart, broadly speaking, we follow a 3-phase process. In phase 1, we start by building a detailed database of UK hotel supply. We do this by using multiple data sources, including third-party databases, as well as our own primary research. We then overlay a view of demand against this supply profile. We do this using STR data for the branded sector and a mix of third-party data sources that enable us to map independent performance. For both the supply and the demand data, all this information is collected at a market catchment level to ensure a robust picture of local supply and demand for all of the UK, and I will talk through this in more detail later in the presentation. In phase 2, we then project forwards the market using a statistical model based on known drivers of UK hotel demand. The most important of these is annual variation in real GDP. Our forecasts are translated by region using regional GDP forecasts and the supply-demand database I described in phase 1. This then provides us with a forecast by catchment area of future supply and future demand. Against this forecast in phase 3, we determine the Premier Inn room opportunity. Having forecast the market by catchment area, we calculate the Premier Inn opportunity based on a sophisticated regression model that determines the opportunity based on the performance of existing Premier Inns today. At a basic level, the regression works off 3 variables: Premier Inn's share of addressable demand within the catchment, the strength of the local market in RevPAR terms, and the expected performance of the Premier Inn. This latter variable is critical, and we model this not just at a revenue level, but also down to returns based on our expected flow-through of sales into profit and the estimated build cost based on local land values. So to provide a bit more detail on that phase one process I just described, you can see on this chart how we go around building a detailed database of UK hotel supply. We use a mix of third-party data sources, some of which are illustrated on this chart, and we match these records together to create a master database of UK hotel supply. Any variances between the databases or hotel details only recognised by a single source are then verified through detailed phone research. When we last completed this exercise 12 months ago, we called over 11,000 hotels to confirm that they were still operational, the size of the hotel, and the type of rate charged by the hotel itself. As a consequence of this exercise, we believe we have the most accurate database of UK hotel supply anywhere. On the next chart, you can see that we execute this network planning process bottom up, and we actually segment the market into 500 distinct marketplaces. We do this as we know that location is the #1 purchase criteria for our customers, and they shop with a very specific target location in mind. By working at this level, we ensure we comprehensively spot all network opportunities for our brands. For some catchments, this patchwork quilt of micromarkets can be complex, as illustrated in this chart with reference to central London. But for key cities, this level of granularity is very important, as the drivers of demand and the makeup of supply are very different at a local level. So, looking forwards, we believe we have sustainable long-term growth opportunities for our brands, and we have set a clear milestone of 75,000 rooms by 2018. As it stands today, we already have secured a committed pipeline of 10,000 rooms, which will take us up to 62,000 rooms, and we have a significant number of sites under negotiation. Within this growth milestone, around 3,000 rooms relate to our new brand Hub, which we will talk through in more detail later today. In terms of the shape of the opportunity, our growth milestone of 23,000, the additional 23,000 rooms by 2018 will primarily be in virgin catchment areas or relate to extensions where the risk of cannibalisation is significantly lower. We will clearly be looking to expand our portfolio in a number of catchments where we are already present. And as you can see from the statistics on this chart, in Edinburgh, we have significantly grown our RevPAR in many towns across the UK, whilst increasing our capacity, and we still have a number of catchments where we remain relatively under-penetrated today. London is a key part of our 2018 growth milestone and represents a significant opportunity for Premier Inn. This reflects the strength of underlying RevPAR growth in this market, and we expect the market to remain robust moving forwards, notwithstanding a post-Olympics-driven decline in performance in the first half of this year. Since 2010-11, Premier Inn has increased its supply by 35%, its total revenue by 43%, and its RevPAR by 5.6% in this market, demonstrating the resilience of our portfolio to expansion. As you can see on this page, around 50% of our total growth opportunity is centred on London moving forwards, in particular central London, where RevPAR, rent and EBITDA are roughly twice what we achieve in the UK regions, as you heard earlier. Hub will also represent an important feature of our growth in this market, in particular in central London, where we plan on having 2,500 rooms open by 2018. To provide a bit more detail on London, of this London opportunity, a substantial portion, around 50%, relates to catchment areas, again, where we currently have no presence. A good example of this is Kingston, where we currently have no branded presence, but have already secured a 160-room site, which is due to open in financial year 2016-17. An important feature to note in our London sites as well is our central London sites in particular also mature far more quickly than for the average UK Premier Inn hotel, and we have not seen significant cannibalisation of our existing Premier hotels within this geographic area, despite strong recent network growth. And we've illustrated that on this chart for you with our recent Waterloo opening, which, as you can see, was opening at over 90% occupancy within 8 weeks of launch, without adversely impacting the occupancy achieved in our adjacent County Hall site. This effect is in part driven by a still relatively low share of supply within central London of just 3%, but it's also reflective of the strength of the overall market and the appeal of our brands in a market characterised by high rates. And now I'm going to hand over to Mark Anderson, who will talk from a property perspective about how we practically secure the new sites and the governance we have around that process. Thank you.